All right, hi everybody. Welcome to tonight's presentation from chart reader to trader investor. The title may have been confusing to you. You probably wonder what that means, but the full title would be how to go from just being a good chart reader to actually putting money in your account or being able to live on being a trader or investor, whatever you want to call it. Well, we got a recording for the link. Events like this, I always put it on the website. So you can go to the website and get it, or if you email me, I'll direct you to the website. But I have a section called Free Stuff, and on Free Stuff down there under videos, there are Trade of the Week videos and events like this one, and this one will appear on the events section. I'm kind of lazy, maybe by tomorrow or something, because I got to do that myself actually. So at least tonight I'm going to do it myself. Okay. And if you can't figure it out, just email me and I'll send you the link. Okay. So I was in kind of getting ready for tonight. It struck me that this, I think, is perhaps going to be the best talk I've ever done. Best meaning not necessarily the most exciting, but the one that could help the most people the most, because this is not going to be an exciting talk like I actually said right in the email. Actually, I want to read the email to you. I know you people don't read these things actually. I think sometimes it's kind of comical what I write almost. The first one just said this is going to be a boring presentation. And then it said, I let you know on Sunday to reserve tonight in case you wanted to listen to my presentation from chart reader to trader investor. I told you it would be a boring presentation, and it will be to many because this is not about the exciting topic of reading charts. The next one will be that, smile. Rather, it is about how traders still screw it up after they know how to read charts. To some experienced traders, they will recognize it as the most important talk that there is. How do I know? Because I've encountered a lot of these problems along the way myself, and I also know from working with other traders that this is perhaps the single most important part that stops most people from the careers of their dreams, from reading a chart to putting money in the bank. There was an email. How else would you be here? Did you just sense that there was going to be a talk tonight and you just logged in on the half chance there might be somebody here talking? So let's get going with tonight for what we're going to do. I flashed a screen in front of you a minute ago, that one, but let's come back to that in 1 second. Here are the topics for tonight. Really three of them. Proper analysis of your chart reading may not be what you think. Never get hurt learning to trade. And it's simply foolish to do so. And the way to hit your goal may be wrong. And this is going to be the really big topic for me tonight to get across to you. It's a relatively new one in terms of me the last couple of months really trying to hit home with what people need to do more than just break even all day. It's been, as you know, a theme of mine for a long time is trying to teach people how not to break even. We all know the first step, let me get this out of the way, is to understand how to read charts. That's just what you have to do, period. I teach classes to do that. You know that. I'm assuming that the group here at least feels competent that they know how to read charts. And they feel that they're good enough reading them that they should be making money, but yet they're not making money. And that usually applies to a huge group of people. Problem number one, there's this huge group that simply does not ever take the time to learn what they're doing. They never, take the time to get an education, understand a way to attack the market, whatever it's going to be for you. Naturally, I think the only way to do it is through technical analysis. I'm 110% technical because that's all there is to me. But beyond that, once people get that, they get to this next step where I think this huge herd of people get stuck, huge herd of traders, where they just can't get past that stage of just kind of these break-even blues. And that's what a lot of tonight's talk is about. I can't guarantee I will hit the exact topic for all of you, but I guarantee that these topics do apply to some extent to almost everybody who tries to trade, because I just know they do. So those are the topics. We're not even going to get to this fourth one, I'm pretty sure. How to evaluate your trades. I just don't think we're going to get there. I do want to keep these to 1 hour, so I'm going to end it at 6. It's something we can do on a future one, or I could give some quick comments on it. I actually backed the slides out and put them to the end because when I put all this together, I ended up with more than I thought. So in a nutshell, here's what we want to talk about tonight. Let's assume you're a great chart reader. I know a lot of you here aren't, and that's fine. But let's assume you're a great chart reader. and you short this stock. And remember, if you're very new, when you short a stock, you want it to drop. I don't know why I picked a short example because this was a trade I did 2 days ago. So I just thought, hey, some of you will recognize that. I'll throw it in there. So there's a short example, and you take this trade and you short it there, and you get it to drop to here, right? Home run. The problem for a lot of people is, how much did you make on it? What did you put in the bank? And you obviously put some money in the bank. But when this is the home run trade or the great trade you did, it needs to be a significant chunk you put in the bank to offset losing trades, to offset the nil trades, and account for the fact that not every trade goes this well, right? And this is a problem that people are into. One way or another, through one force or another, you end up with trades like this, right? And by the way, anytime I'm getting through to you, just type a 1 on the screen, or anytime it's like, yeah, wow, that is me, thank you. Because I know this happens a lot. And you have these trades and you feel, let me get the little red ball up here. Here's the little red ball. And you get these trades where you look back and you say, man, I know what I'm doing. I mean, I find these charts. I may not be perfect at it, but I certainly get from point A to point B. And yet at the end of the week, I have no money. And then what you always say is, you know what? Yeah, I took some money this time. And you say whatever you say. You say, well, I had to take some quick profits, or, oh, I had to make up for that losing trade yesterday, or oh, this or oh, that. And you'll always say, I'll do better next time, right? That's always the line, in one form or another. That's the line that comes out of your mouth. Wait, I'm going to take a note of something I want to say to you in a little bit. And this is what we have to avoid, or you will bleed to death one way or the other. And in some cases, bleeding to death is worse than just, getting hit in the head your first couple of months and getting out of the game. Bleeding to death is not fun because it takes up a lot more of your time. There's some people I know that came in, they were terrible at it, they lost some money, and they went on to do something else. And in some cases, that's not the best thing. Dying at the death of 1,000 paper cuts can be worse to some extent. So that's what the general topic is for tonight, just in a visual. That's what we're trying to accomplish here. So let's go back to, let's start with this slide. This is a quick little test here. Feel free. This is somebody's trades. Trader Sally results today. Trade 1 plus $200, trade 2 plus 150, trade 3 plus 50, trade 4 plus 50, trade 5 minus $500, end of the day down $50. Take your time. I'm going to give you a minute or two to look at this because I think it's important. That's why I put up on the screen while you were waiting for me. What would your advice be to this person? Don't do more than 4 trades. Okay, well, let me get some of the obvious answers out. Don't take losing trades. Quit whenever you're up $450. Okay. Cut losers short, let winners run. But specifically, rather than the general blah blah sayings that are out there. If this is a friend of yours, you consider yourself a good trader, what would you say back to this person? Seriously, what would you say back? Yeah, okay, follow your trading plan, blah blah blah. That's what we all say. But what should your trading plan be? And what is the problem? Let's get through the cliches. What is the real problem? Okay, manage stops better. Okay, that's interesting. Establish a risk amount per trade. Okay. Risk management. Okay, so a lot of you are saying this. Let me see if I can summarize for you and see if we can agree that this is a good answer. It's hard to say over trading, Brent, because I mean some people take 20 trades a day and they make money. Some people take 2. So, over trading is kind of a relative thing. I know you're saying, oh, that 5th trade was a loser, but I mean, you can't say, you can't say don't take the 5th trade anymore the rest of your life. That's not really it, right? Okay. Analyze your last trade. Isn't it possible, though, Vald? Isn't it possible that the trade itself is actually a good trade? I mean, good trades can be losing trades, right? Isn't that true, everybody? I can't quite read all of your answers, but I'm trying to. You can't. Just because a trade lost money does not make it a bad trade. You could have, there are good trades that lose money. We don't like them, but trading is not 100% certainty. It's probability. So you will lose on some good trades, and you have some bad trades that make money. That happens too. Well, let me see if I can synthesize your answers here. From what you're saying, what your advice might be to this person is, limit your risk to $100. Would most of you agree that would be a good advice to this person? I don't want to put words in your mouth, but I'm trying to say, establish a risk amount, don't lose too much, blah blah blah. Because because then that $500 we could maybe bring it down. Does everybody agree with this, or is there somebody out there who has a problem with this concept? I'm here, I'm just reading. Okay, well, one thing we don't know if this person had a $500 risk, right? And they didn't break any rules, or if they had a $100 risk and they broke some rules. So let's say you want to make the risk. You go back to this person and say, hey, you know what? That $500, that's just insane for your winners. Let's make your risk $100. I want to show you something. And about half of you, I think, are already getting the point of what I'm about to do, and the other half of you are going to be shocked. Do you realize that on this person it's quite possible for Sally, if I told her to limit her risk to $200, I'm sorry, to 200. I just for the slide I said $200. Do you realize that if I told this person to limit their risk to $200, do you realize that they could be worse off? Did that thought even occur to some of you? Matter of fact, here's what actually happened to this person. Some of you understood that already. Some of you are going to be shocked, right? There's the $200. There's trade 5. We brought the risk down to $200. Hooray! So you think we're up $300, but we're not. What happened on trade 1? Well, trade 1 was down $250 before it came back to be a $200 winner. Oh, whoops. That means that it had to stop out at a $200 loss, right? You can't go back and say, oh, it's going to be a winner, because that's how you got stuck with a $500 loser. Does everybody see this? All these trades, these 4 winning trades, may very well have been trades that failed initially, would have violated a $200 loss, so they all would have had to be stopped out. But because Sally hung on to these trades, she actually improved her results dramatically by doing whatever she did. And that may be not following her stop loss this day, which would be a bad thing, of course. But she may have actually done better with what she did than what your advice would have been to give to her. So what's the point of this slide? The point is that the analysis that has to be done is usually a whole step beyond what most people do. In other words, it's not an issue of what her risk was or whether she followed her stop. I mean, that's part of the problem. But you can see just simply making her restrict herself to a certain risk amount, whatever, may make her worse. You have to go in and look at her trades, look at her charts, and determine, even if she's a bad trader, to improve what she's doing, what should she have done to manage these trades better? In other words, what was the plan? What should it have been? How much room did she need? And then you have to start saying, okay, if you're getting in a trade and you're making $200, you really have poor entries in that you're down more money than what your goal is on the average trade. That can't work. So we have to start looking at your strategy. We have to start looking at your entry. You have to be a better trader maybe. Maybe you need better chart reading abilities. But even when you get good chart reading abilities, if you take this to a less extreme example, and this may apply to many of you, it may be the case that you are getting nicked out of a lot of trades that are becoming losses, that had you used a little different process, given something a little more room, used a little wider stop, a whole list of things that are possibilities, it could have dramatically improved your results. I've done this with people where I've had people lose money for the month, and by just a minor alteration of what they do, they could take a $5,000 losing month into a $5,000 winning month just by trading us one small thing consistently, by changing one small thing. Now, what that is for each of you, I can't tell you. Maybe I could help you if I worked with you all one-on-one, but you have to do this for yourself. You have to go take a look and determine how exactly it is that you can improve your trading. Step number 1, by being a better chart reader, but step number 2, even if you're good at reading charts, if you get things, remember the slide from point A to point B, if you get things to move that far from point A to point B, you have to make the money from that move. You have to make the money from that move, right? So if we look at Sally's trades, and she was all long, and her trades basically all went from low point to some high point. If she basically captured a move from point A to point B, The goal is not to say she's a bad trader or to learn better charts. The goal is to say, how can you better manage what you're doing from point A to point B? Does that make sense, everybody? What I'd like to do, I can't, I'd like to go just repeat this whole last 5 minutes because it is so important and it's so hard to get through to people. I know some of you totally get it. Some of you it's glazing the surface and you're not sure if you got it or if there's more to get, and some of you won't get it at this point, and you just may not. But it involves this self-introspect analysis that you have to take a look at. And I'm not talking about being a rocket scientist. I'm not talking about in this point, I'm not even talking about the issue of being a good chart reader or technical analyst. Um, you could be just mediocre. You could be just doing your own thing and saying, hey, I think this is going higher because the sky is blue today, and whatever it is. But my point is, if you look at a chart that you took a trade on and you went long and you started down here, and whatever the stock did, it ended up here, you know what? You better have some money in the bank to show that, because that is the problem more people have than not. It's not always finding the chart to go from point A to point B. It's what did you do with the move? So many people aren't with the move because they blow it at the beginning, or they take little minuscule profits that never offset their losses, right? Well, George, you can't really say that. That's not necessarily true. Because she could have had a $300 risk amount, a $400 risk amount, whereas she could have maybe been down. Well, no, it depends. It's all relative, George. I mean, if she had a $500 risk amount, let's say she had a $1,000 risk amount, right? To be down $200 is nothing. You're down 1/5 of your risk amount. That's a normal jiggle in any trade. I'm virtually always down 1/5 of my risk amount. You know what I'm saying? We can't guarantee that's the problem. I know you may be thinking, well, she should be risking $100, so that's a heck of a lot of money. But relatively speaking, it could be just a little jiggle that she's down. Now, naturally, if that's the case, if her down amounts are not that severe, then it's her target taking that's terrible, right? Or the fact that the charts, you could be right, the chart's not moving enough in her direction. But we could easily, if we go analyze, and again, I'm glad you brought up, George, because this is exactly the point that I'm talking about. It's sometimes it's too easy to just say, oh, you know, that's what happened. You know, you're risking too much. You're a bad chart reader. But again, I want to emphasize, if you take, let me get that pencil back here. If you go from here to here, and if you were risking $500, and at some point you were down 200, but you ended up here, you know what? I think you ought to have the money, right? Yeah, partly too, Joe, right? Well, there's clearly something wrong, George, obviously. I'm just saying it's not clear. It could very well be that she really has great trades. Let's say this was a $2,000 profit up here, a 4 risk unit trade, which I'll get to in a minute, but she just chopped it out right here. She just chopped it out for 50 bucks because she was so terrified. Have you ever been so terrified that you're down some money, that as soon as you go green, that you just do everything you can to protect that green? Does that ring a bell with anybody? Don't be embarrassed to say it, because if it is, it means you're a human being who has been instilled with the number one psychological problem we all have, which is fear. The fear we have is fear of being a loser. No, George, you're great questions. You're just great questions. I mean, this is exactly what I want you to say, because I just want to bring out that it's not this simple. So this is exactly one of the things that we have to fight. Now, let me move on, because there's a lot of other points here I want to make. Well, there's 3 big points I want to make, not a lot. There's 3 big points I want to make. Whoops. So the lesson here is the trade sites that are the ones that make money and the ones that. Yeah, well, let's look at a couple more slides and we'll get to some of that. You cannot learn much by just looking at the trade record, because you can find violations, right, made, but you cannot find what is best for your trading until you see how the records match the charts of the trades and examine the best alternatives. Ironically, this next statement applies to 95% of you. I promise you. Ironically, where's my highlighter? Do I have a highlighter? Ironically, the thing traders want to look at the least is where the real value lies. In some presentation, I called this the gold, and it's in the losing days. Do you realize that? The average trader on the losing day even if it's a good trader that does record keeping and that kind of stuff, at the end of a losing day, what do they typically do? By the way, right at the end of the day, it probably is good to get away and grab some dinner, go for a run, do whatever you're going to do. But then later that evening, that's the most important time to get down and see what happened today. There's no way to avoid, if you made mistakes today, there's no way to avoid the mistakes tomorrow unless you identify the mistakes today. And unfortunately, the way we are, give me a 1 if you agree with this. Those of you that keep records, when you have a winning day, boy, you're right there at 401, chop, 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 record, record, record. Boy, did I do good, man, am I good. You have a losing day, and guess what? 3 days later, you're finally putting down some of the records, maybe make some notes, or maybe you skip the whole day entirely, right? Right? True, and that's exactly backwards. It's exactly backwards. It's nice to re-emphasize the winning trades, and you should review those too to make sure they were good trades. Just because you won a day doesn't mean that they're good. But number 2 is that on the bad days, that's where the gold is. That is where you improve. You should look at a losing day as saying, okay, you know what? I found I made some mistakes today, but the good news is I'm not going to do these again. I'm not going to do these again. I agree with Steve. The trades I try to stay in are the ones that make money. Right. Well, you know what, Stephen? That's a cliche. That's a cliche. I mean, it's literally a cliche. I say it too, joking around. I sometimes I feel it happens to me. Is that when you decide I'm going to stand and go for that target, gosh darn it, it's the one that comes up short of the target, then stops you out. When you say, man, I'm going to take these profits right away and make sure I make something, it goes 6 times past your target, right? By the way, do you guys think that is really, really what happens in the market, or do you think that's part psychological? Do you think there's really some mysterious force out there that looks over your shoulder? Whenever you put in a target you're going for, they make you come up short, and then as soon as you sell it, they make it go 50 times past your target? Do you think the market makers out there are looking at your 1,000 shares in the midst of selling millions and saying, well, let's show this guy a lesson. Let's teach him never to come back here and day trade. Yeah, of course it happens sometimes, but we have selective perception, right? We all have selective perception. And we hang on to and remember those things that justify the things that we want to be justified with. Like, oh, the market's against me and I just can't win at this, But let's talk about what the real underlying cause is, because that's what the next slides are about. The real underlying cause of what all this is. Let's take another look at the same money thing here. I want to show you another aspect of this. Who's a great guy? Who are you talking to? Jeff? Oh, somebody who said they liked what you said. Next slide. When you're new, now look over here on the left. When you are new, you start off, and let's say you're risking 50 bucks. Okay, you're risking $50, right? So you come along and trade number 1, $200. Is that a good trade? Oh, thanks, George. Is that a good trade? If you're risking 50, that's a phenomenal trade. Now, if you're risking $1,000, that's not a good trade, But for risking 50 bucks, that's a phenomenal. That's a 4 risking a trade. It means you made 4 times what you risk, which is the only way you can really measure a trade, right? Because if somebody's risking $1,000, it's not a big deal to make 200. But if you're risking 50 bucks, that's phenomenal. I've only, I've had some 4-hour targets, partial targets, but a 4-hour out the door, I've only had one of those in the last 4 weeks I can remember. I mean, I don't, it's hard to get a 4-hour trade out the door. That's phenomenal trading. That's great. A 3-hour trade. Yeah. The novice gap, was that GP? I don't know symbols. It was the novice gap, that one. Yeah. Through 150, great trade. Okay, 50 bucks. That's not bad if you're risking an R. You made an even risk amount, right? That's good. That's good. And then 50, and then, okay, now here we know we just screwed up, right? This is typical of a new trader. By the way, new traders can make a ton of money. Don't think a new trader can't make money. New traders come in sometimes reckless. They don't have some of the abandoned fears if they haven't lost money yet, and they come in and they make some good trades. But then what happens is they feel bulletproof. They feel, hey, these other trades work. I'm not going to sell this one at a loss, and then it's a $100 loss, and go, I can't get back $100. That's crazy. I can't get back $200, and pretty soon they have no choice, and they're $500 down. Right, people? This is typical of a newer trader. Agree? Newer trader can sometimes do okay making money, but the other side of it is they hit that big loss sometimes. We've all been there. Has anybody in the room ever been down at least more than twice the money they're supposed to be down? Type a 1 on the screen. If you've ever been down more than twice the money you're supposed to be down, and be honest. Yeah, the entire room should be typing 1s unless you don't trade at all. Unless you don't trade at all. Yeah. But what's ironic is, so the trader ends up down 50 bucks for the day. But now here's what's really ironic. And I want you to follow this and tell me how accurate this is. So time goes by and now you're a good trader. You're a good trader and you're risking 500 bucks, right? The first trade you take out the door, all right, 200 bucks. Well, yeah, it's not great. It made money, you know. Can't go broke making a profit. I made some money, 200 bucks. That's not bad. 150, okay, it's like a third of an hour. Well, you know, I made some more money. That's okay. I made 50. Well, that's just kind of almost break even, but I made money. 50, I almost break. And now here, oh, now I lost 500 bucks. Now, is there a problem with me losing $500, everybody? Was that a problem in this scenario? If I'm a good trader risking $500? No, I lost what I intended to lose. Well, I didn't intend to lose. I lost what I'm allowed to lose, right? What's my problem? And by the way, this is where probably a lot of people here listening are right now in this category, correct? Where, boom, the loss isn't the problem. It's all these little gains that you get, right? But hey, Taz girl. No, but we take our full risk and don't. Right. That's what's happening here. This person is fearful. Well, two things. It could be, again, not a very good chart reader, not a very good technical person that just doesn't find good trades. But more likely than not, this person is hyper management. Just, you know, the minute they go green, they're getting very tight and securing things. If you do that, you're going to have a problem. Let me give you one other example of something. I did this with the room today. And I was going to put a slide in about it, and I never did. Let me give you another example of something. I want to tell you, I want to ask you if, well, let me just do it, and then you can figure for yourself if this sounds like something you do. Let's say you take your first trade. Let me switch over here to the whiteboard here. Let's say you're risking 300 bucks. You take your first trade and you're down $300. Right out of the gates, boom. Okay? Well, that sucks, right? You're in your second trade, and you get in a trade, boom. You have your stop loss here. Really nice looking trade. You have a target out here. Let's say it's a 2.5 hour target. So you're looking to make 750. Okay, that's a 750 amount that you'll make if you hit your target. Okay? And you take off and it's doing well. Pulls back a little bit, starts to go up, and all of a sudden you're up $290. And you look around and you see you're down 300 for the day, and you're not feeling good about that. You're up 290, and it starts to hiccup a little bit. And you go, you know what? If I sold this right now, I'd be like almost break even. Let me just kill this trade. Take the 290, and now I'm kind of break even for the day. And we'll go to the next trade. Does that thought process sound familiar to anybody? Honest, does that thought process sound familiar? Okay. If that's your thought process, listen to this carefully. You have, by design, guaranteed yourself that you will never be better than break even, because you are literally trading to be break even. You have set yourself in a system where your ultimate goal through perfect trading is to break even. Think about it, right? See, you have a losing trade. Okay, there's a loser, right? We have a winning trade. There's a winner. Do you realize that you could bet 40% and be a great trader? It all depends how you set yourself up. You don't have to. But the idea is that if you lose 300 bucks and you make 750, guess what? You're up 1.5 hours for the day. And I'll talk about that later, about maybe just how good that is. But because we don't trust ourselves, because we don't trust our records, because we don't know for sure that we can get to that target because they know for sure that we're going to have, we just don't want to be a loser. So we do all we can to immediately try to erase the losing trade from our record, from our mind, and therefore we are not a loser anymore. We're back to zero. And then of course we're thinking, well, the next trade, but then the process goes over again, right? The process starts over again. If you have another loser, then you got to get break even. If you have a winning trade next, the next trade starts out to be a loser, and then you want to kill it right away because you don't want to go negative on the day. And I'm not saying having rules set up are bad, but the problem is most people don't have rules set up. They fly by the seat of their pants, and they let their emotions drive and control every action they take during the trading day. And if this is you, it's not even possible to make any real money. And you will die the death of 1,000 paper cuts. So step number one in all this process is to recognize you have a problem, right? Yeah, naturally, I mean, somebody's saying that they agree that, the issue is that you're not having enough rewards set up on the chart, but I don't necessarily agree. Certainly that can be a problem. I mean, without a doubt, that can be a problem. I mean, if you're taking bad trades and you get in here and you just can't go any higher than this and your stop's way down here, well, you're a bad chart reader. But my point is that you could be a really good chart reader. I have this expression, and it's not meant to be nasty, but that's 10 cents. 10 cents and for 12. And the expression is called a dime a dozen. Good chart readers are a dime a dozen. I mean, no offense, but I mean, it takes some skill and time to learn how to be a good chart reader. I'm not saying it's easy, but I mean, I think somebody who really wanted to, I could teach them in 3 months, just not even privately, just doing what I do in the seminars and in the room, take the seminars over twice and be in the room a couple months. I think you'd be a good chart reader. Good enough, certainly good enough to make money. That's not the problem for most people. It's what I'm going over now. It's, if you paper trade, you make a ton of money, right? And if you go back and look at your charts, sometimes you say, man, I had a lot of good trades this week, but the money's not there. Let's, again, let me keep going on here to make the next point, and then we can talk about all this. Where are we on the slides? And then I ask you, does all this look familiar? And of course, as you notice, these two columns are exactly identical, left and right. They're just a matter of perception. It's a matter that as we go on, we get more chicken. The lesson from this slide is, well, if you're not a great, again, Carmen, if you're not a great chart reader, I mean, that's step one. You need to be. Period. You just need to be, because that's how you make money in the market, is through chart reading, not through any other way. Unless you're 1 in 10,000 people. If you're 1 in 10,000 people that has unique special talent, forensic accounting, extreme concept of understanding companies, or whatever, or you're an inside information trader dealer, and you don't get caught and go to jail, unless you have one of those special talents. Technical analysis where it is, and you need to learn how to read charts. It's not very hard. It's not hard. It's like learning a foreign language, I say. But here's a lesson from this one, and this is a favorite quote from this guy. I'm not even real sure who he is. I'm not really sure if he stole it from me. I stole it from him. I'm sure I stole it from him because I don't remember these things. But one common adage that is completely wrong-headed is you can't go broke taking profits. That's precisely how many traders go broke. While amateurs go broke by taking large losses, professionals go broke by taking small profits. Man, do I love that saying, because it is just so true. It is just so true. You have to understand this and cut it off. Okay? There is no blanket answer. And by the way, I do have a really good answer for you coming up. Obviously, solving a trading problem is not as simple as attending an event like this, and in 10 minutes I say magic words to you and it fixes everything. But I do have something that I'm going to get to in just a couple slides, and I'm just going to tell you. I'm not talking about, me. I'm not talking about selling anything. I'm talking about a real answer we're going to get to in just a minute that I think most of you don't realize, and it's something that I really started talking about this last 2 months with my own company. But there's no blanket answer. This is psychology that is only overcome through understanding the charts. Step one. Somebody said they don't understand the charts. You got to understand the charts, or you're wasting your time and your money. 2, the analysis of trades from that understanding, and 3, that leads to confidence. You need to have the confidence. And there's some people here that are in the trading with me during the day, and they've been with me. Good trades, bad trades, good days, bad days, and they know one thing, and I don't think they'll disagree with this. I'm confident. If I have a bad trade or a couple bad trades, I don't give a darn, because I know I will be back. There's no question, because I have statistics beyond belief over years that say, hey, I know what I'm doing. Quick story. I'm going to do a video about how to come back from a bad week or something. And I want to tell you the confidence you have to have. One of the things you have to do, and there's a lot to this, but one of the things, I'm just kind of a sidetracking here for just a quick second, but it has to do with confidence. After a tough day, I had somebody who knows me, who is a long-time trader that started following me years and years and years ago. He's a good trader in his own right now. But he sent me an email, and the email started off, some observations about your trades today. What do you think I did with that email? Some observations about your trades today. I hit delete at the speed of light. Don't get me wrong. I believe in analyzing what I did. I don't want anyone else's opinion about what I did. I could care less about anyone else's opinion. I could care less about anyone else's opinion about the market or about what I did. I know what I did. I know where the mistakes are. I know where the flukes are. And I know how to fix it. And no offense to anyone else, but that's where you need to be. And the reason I'm bringing this up is because that's the confidence you need to have, is to be able to say, hey, sure, I screw up sometimes, but you know what? I know how to fix it, and I know what I did wrong if I did something wrong, and I know sometimes you can flip a coin heads 5 times in a row, and it doesn't happen often, but you can do that. I mean, there's probability involved in trading. We're not perfectionists. We're trying to get odds on our side, and even if you have odds on your side, even if you do things right, you can just hit a tough streak, and when you hit a tough streak, sometimes you start to get psychologically damaged, and you have to recognize that and reverse it. But you have to have that confidence to be able to say, hey, okay, I had a losing trade, but my next trade, I'm taking to the target because that's what I do, and I can't make money if I don't do that, right? And I know that part is easier said than done. I understand that. They're just words that I'm saying to you, but it's the goal you have to shoot for. Is this all making sense, or is this just yuckity yuck? What's this guy talking about? All I can do is try and instill some tidbits here and there. And over a period of time, you start to synthesize this stuff. And for a lot of you, it clicks and you do it. And for some people, you're going to, still struggle a while. And if you don't get an understanding of charts, that's the first step. You're not going to be able to do that. But let's go on. I want to get, gosh, time is flying by. I'm glad I didn't include that last section because we never would have got to it. So let me go to the next section, and then this is going to have the really, really important thing I want to get across to you that to me is just light bulb moment. If you're not in the room with me, you already know this if you're in the room with me, but if you're not, it's something I really want to get across to you because I think more than anything else, it's the secret to trading, if you want to call it that. Now again, I'm not talking about reading charts. I mean, I'm saying once you know how to read charts, this problem we all have, I think there's a fairly good solution to it that you've not heard from me before unless you're in the room with me. Yeah, well, quickly on Carlos's comment, the secret, Carlos, is that you can't look at every trade. You can't try and reorganize your management, your psychology about any one trade. Stuff falls through the cracks. Stuff falls through the cracks. You have to accept that. If you want to seal all the cracks, you can't do it. You can't do it. You have to have a plan that covers the majority of trades properly so you make money at the end of the week. That's what you have to do. You can't skew everything to cover that one trade and then let the other trades fall apart. You know what I'm saying? But quick comment on that. Let's go on to this. Never get hurt trading. Now this is just a little side detour here, but never get hurt trading. And this is going to lead to what I think the biggest mistake people make is you start off paper trading. That's what you do. Why? Establish what you want to do, a plan it's called. Learn your platform, the market, all those dirty little tricks that happen to you, get all your losses out of your way. Prove that you can make money on paper. This is the funny thing that cracks me up. Anybody can make money on paper. You get to cheat, you get to start over, you got to pretend you didn't miss your stop. If you can't make money on paper, why are you going to even risk $1? Why are you even going to load up the screen if you can't make money on paper? Now when you make money on paper, risk $5. Not $500, not $100. Listen to me. Risk $5. Now you have a real record. It's not fake anymore. When you accomplish your goal, move up to $10. I don't want to go too much into detail on this. Establish your goal. I don't care what it is, just so it's objective. A dollar amount of gross profits, not net, gross, because you're risking $5. You'll never be profitable. I know at 5 or $10, you'll never be profitable. You're not trying to be profitable. You're trying to establish a track record of confidence. You can't do that risking $100 or $200 or $500. Learn to trade properly and develop your plan, skills, and patience. Move up when you accomplish your goal. Move down if you hit your demotional requirements. In other words, if you screw up, you got to move down after a certain amount of screw ups. You can't just sit there. If you do this, think about it. You can never lose a significant amount of money. You'll never lose a significant amount of money. You're just going to be losing your commissions and a few bucks here, but you're not going to blow out a $50,000 account like some people do in a couple months because they get frustrated and they keep risking more and more and more and more. This talk I just had, who is this for? Start off on paper, risk $5. Who is it for? Who am I talking to? Who am I talking to? Real simple answer. It says, come on. I'm talking to anybody who's not making money. I don't care if you've been trading for 7 years. No, there's people making money, Carlos. Absolutely. There's people making money. But it's not a question of how good you are, how smart you are, how many classes you've had, how long you've been trading. I hear this all the time. Oh, Paul, blah, 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 blah. I'm risking $200 because I've blah, blah, been around 7 years. I was around back at the beginning of the small execution system. Or how much money you make? Well, I'm not really making money yet, but I'm getting there. Knock it off. Start where you're supposed to start. It's not even a matter of the money. I don't care if the money you're losing, and this is the thing about $100. It's not that, maybe you have a $500,000 account, $100 you don't care, okay? It's not the $100 in terms of the damage to your financial account. It's huge mentally. You guys agree with that? It's huge mentally. Because you're just a big loser. And you're a big loser because you're not understanding the charts or understanding the management process or understanding what you need to do because you're getting all hung up on making money. Learn the charts, learn to make money on paper, learn to make money with a few bucks, and then when you start increasing the risk amount, you shouldn't even care. Because once you have the confidence to say, you know what, I made 7 risk units last week. Now, a risk unit means whatever amount of money you're risking. It's like reward to risk. So if you're risking $200 a trade, if you made 7 risk units, you made $700. And if you can do that, well, then you can make 7 when you risk $300, and you can make 7 when you risk $400, and you can make 7 when you risk $500. If you have the confidence to say, I can do this, you can do it. But if you don't have the confidence, you're never going to be able to do it. Discipline comes from confidence, comes from a plan that you follow and you execute and you see it expand in front of you into fruition. It's a circular thing in a sense. You have to, and that's why you ever heard the term is called building confidence? You ever hear that expression? Building confidence. Nowhere do you hear you get confidence, right? Nowhere do you hear you buy confidence. Nowhere do you hear anything. It doesn't come in bulk. You build confidence. Discipline comes from confidence, which comes from the ability to follow a measured plan and see your improvement and see what you're doing and see the ability to reproduce what you do. When you're on the other side, it's so simple. And there are probably at least a dozen people in the room that know exactly what I'm saying. If you want to volunteer and say, yeah, please do, because it would confidence the other people. But there's people on the other side that look back and say, yeah, it's so simple now. I had a hard time getting through it, but once you get through and you look back and you say, man, this is so simple. But when you're not through it, there you go, TYW. But right, TY, but it's like this barrier. It's like this sheet of ice or something, or glass. It just looks impenetrable. But once you get through it, you go back and go, man, it was so easy. It's so much it comes down to. I just should have done what I was told to do all along. But I'm too smart. I'm not going to follow what people tell me to do. I'm smarter than everybody else. I can figure this out. I don't need help. I don't need training. And it's just a matter of how long you get frustrated before you come around to either kicking yourself in the butt and figuring out the mental part, or if your problem is not learning charts, to learn charts. I told you my story about learning charts, right? Because again, this isn't about that tonight. Again, I'm assuming the group here knows charts, but a lot of you probably don't. And if you don't feel you can get the confidence because you just don't know charts good enough, let me tell you my story real quick in 30 seconds, and then we'll go on to the most important part of tonight. When I started, 18 years ago, whatever, I had a business. I sold it. I decided I was going to, play the stock market, and I didn't. My education was I was doing options, and I read a book called the McMillan book. Options is a strategic investment. Phenomenal book, and I learned options. But to do options, you have to know charts. And I was trading 4, 5, 6 months, and I was actually up a little money after 5 months. But then I got in this thing. I had options on oil stocks, and I potentially could have lost. Well, I ended up losing pretty well in this, but I had way too much risk involved. And there was a Friday afternoon came along where all the trades went my way, and I was underwater, and they all went my way, and I was like break even on a Friday afternoon. So I had to make this decision, right? Do I get out of these positions and just lose a little bit of money, or do I stay with them? And the outcome isn't important. What's important is, when push came to shove, when I looked at those charts, you know what I said to myself? You know what I realized? When the money was really on the line and I wasn't just playing around, you know what I realized? Anybody want to take a guess if you haven't heard this story before? I don't tell this that often, but you may have heard it. What happens? What happened to me that afternoon? I'm looking at the charts. Big decision. Do I get out of these, or do they keep moving in the direction I want? What I did is not relevant. The thought process, though, is very relevant. Well, of course I didn't want to lose. No, my point was I didn't have a clue where the charts were going. I'd never taken a class. I tried to self-teach myself. I didn't have a clue. When it came down to it, I looked at those charts and I said, what are you doing? You just kind of justify you've been doing the last few months. Things go your way. You think you know what you're doing. They don't go your way. You think it's a fluke. I didn't have a clue. I did not have a clue. That's a different story. and I realized it. And it was a Friday, and Monday morning I called and I paid whatever the price was to get an education. Didn't ask what the price was. Didn't ask for a deal. I actually was so frustrated with myself. I didn't even ask or negotiate a price or a special or ask. I just said, when's the next class? Here's my credit card. Goodbye. It was the best thing I ever did. Best thing I ever did, because what I didn't know was amazing. Yeah. So anyways, we have to keep moving here. Thought process, blah, blah, blah. We did this slide. Okay, now the process, the problem initially is, here's an important point though. The problem is initially, and I kind of said this, that people want to risk more than they should, and it most importantly, it deters their ability to learn, because you're looking at the charts with a clouded mind because you have money on the line and you can't really follow the charts properly. Trust me, this is what happens. But then down the road, here comes part 2 of the problem. Down the road, maybe you know what you're doing a little bit better, and you decide that you're going to be prudent and you're going to be conservative. And you're going to keep your risk at $100, and now you're going to start trying to trade for a living. So you have a $100 risk, and you need to make $8,000 a month to make a living. Now follow this, because this is a lot of you right now, right? You want to be conservative. I'm not going to be aggressive. I'm going to just risk $100, okay? So what happens when you try and do it under this process? Well, all right, 8K a month, there's 20 trading days a month, you got to make $400 a day, right? That doesn't sound bad, okay? $400 a day, you're risking, that's 4 risk units a day because you're risking $100 a trade. So you got to risk 4 risk units a day, right? So you got to make 4. Now everybody know what I mean by risk unit now? A risk unit is simply the measuring of a trade based on reward to risk. So if you risk $200 and you make 400 on a trade, you're up 2 risk units, right? So if you're risking 100, you need 4 a day. So halfway through the day, you're up 2 risk units, right? What do you have to do? What does he or she do if you're up 2 risk units? You did some trades, blah, 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 the smoke clears, you're up 2 risk units. What does that trader have to do? What is the trader going to be compelled to do? Well, that's what they should do, is find good trades or don't trade anything. But what does a trader do when they need to make 4 a day, they're at 2? No, you're missing the point. I'm saying this person's doing okay. They're up 2 risk units. They're up 2 hours. They're plus. They have no trades open. They're up 2 risk units. So they look around and say, well, I'm up 2 risk units. I feel pretty good, but I'm only at half my daily money goal. He or she is going to pressure themselves to find another trade, right? Got to keep going. Got to get the next trade. Got to keep going. Got to keep going, right? I don't like bringing this analogy up because it gives people the wrong impression, but I mean, in a sense, trading is like blackjack if you're a good card counter. In other words, if you get the odds in your favor, that's great. But you sit at the table too long, you water down your odds. Do you understand what I'm saying? Let's say you're a good card counter. Let's say you make money playing blackjack because you get that 51% odds because you can count cards perfectly, right? But you make money because you play the high odds hands. If you sit there long enough, it's going to come back against you. And it's kind of similar. I don't like to use that analogy on one hand, on the other hand I do. But it's kind of similar that if you force yourself to keep trading, you eventually diminish the quality of the trades, and it gets harder and harder to make the money you need to make, right? Now, I want to throw this thought out to you, and I think this is something I just started promoting this last 2 months, and to me, I think it is what a lot of you are missing. Now, it can be a dangerous comment if you don't listen to the prerequisites, but you need to build the confidence, you need to learn how to trade, and then when you do, you need to risk the amount of money where 1 hour a day makes your living. You need to risk the amount of money where 1 hour a day makes your living. Now, pre-qualify that. Don't do this out of the gates, or you just might as well just go to Vegas and put your whole bank account on one hand of the roulette wheel or whatever. But I'm saying, if you think about it, if you trade like I told you, if you start off on paper, if you start off moving up the risk, if you consistently week after week are making 5, 6, 7 risk units a week, all you need to do is substitute the risk unit that makes your living by making 1 risk unit a day. 1 a day. It could be, Reg, it could be 1 trade. It could be, and a good example, I mean, yesterday I took way too many trades. I made 1.5 hours yesterday and it was on 5 trades. 5 trades. Today I made over 2 hours on 3 trades. I made 3 hours. No, was it 2 hours? I don't know, 2.5 hours on 3 trades. It doesn't matter. The point is that I feel an hour a day keeps a job away. Now look at this next slide. This is why. Do you know how easy it is to make 1 hour a day? Now, I'm saying that a little bit tongue-in-cheek. I don't want you to get mad at me because, I mean, if you can't do that, it's frustrating. And yeah, I have days I can't do that either. But I mean, in general, do you realize how easy it is to make 1 hour a day? Do you realize how easy it is? I mean, 1 hour. Do you see what I'm saying? Instead of trying to make yourself such an incredible trader that you can make your living risking $100 or $200 a trade, how about you prove how good you are, get that confidence, and then move your risk unit up to where you need to be to make your living. And then you have a piece of cake making your risk unit every day. I run the room, and you know how it is in the room. My thing now is we're kind of done at noon. I rarely take new trades after noon. The room stays open and I manage. I usually, like today, we did 3 trades. I had a loser out of the gates, and then we had 2 nice winners, but I didn't enter a trade after 10:30 or whatever the last trade was I entered. But the last one didn't close out until 3 o'clock or whatever. So I'm just managing it. And what I'm promoting is that you do your homework a little bit, you come to the market prepared, you focus, you trade for a couple 3 hours, you put some stops in, you walk away. Now naturally, it doesn't come out that you make 1 hour a day, 1 hour a day. Things average out. You have a day you make 3 hours, what a great day. You have a day you lose a couple. But I mean, at the end of the week, you need to set yourself up that if you're making 5 hours a week, you're making your living. If you're making 7 to 8, you're just killing it. Does that make sense, everybody? This revelation, when you can get this in your head, is just incredible because you know what? You can't make 4 hours a day. I can't make 4 hours a day. I can't do that. I've been doing this for 18 years. I'm one of the best traders out there, in my opinion. I can't make 4 hours a day. And you guys are trying to make 4 hours a day because you don't want to risk more than $100. It's insane. It is just the wrong way to go about looking at it. Now, again, I want to say it for the 30th time, and I want all of you to be able to hear this in your sleep. This is your goal is to end up that you advance to that number, whatever that is to you. $500, whatever. $500 makes 120 grand a year. Gross. No sound. What? Sound check? We good on sound? Sound okay? Everybody real quick? Okay, we're good. All right. So all you have to do is establish yourself as a good enough trader to make 1 hour a day. But here's the kicker. You just have that confidence that you can do that. Because you know what? If the risk amounts are getting a little high for your brain, you're not going to function well. You have to work into it and have the confidence every step that, yeah, boy, I didn't like losing $1,000 today. But you know what? I know I'll make it back by the end of the week. Thanks, Adrar. And again, this is just math. I used to title the slide "Math." That's what it used to be called. But I just want you to just you all know this, but just take a look at this. If you're risking $200, let's say you're risking $200 a trade, and let's say you're going to take 100. That's 5 trades a day, which I think is, more than I like to say I do 2 to 4 a day, and lately I've been kind of doing 4 as an average. But 2 to 4 a day. But this is 5. So let's say you have to do 5 trades a day. Okay, 100 trades a month. And let's say your batting average is 50%. Now, is that hard to do? Is 50% hard? That's every other trade right, every other trade wrong. Well, the answer is it depends. How big is your winner? How big is your loser? But I'm saying if your Sharpe is 1.5, in other words, a 50% batting average and Sharpe 1.5 means that you make $300 on one trade, then you lose $200 on the next trade. You make $300 on one trade, right? Are those numbers hard to achieve? Anybody? Are those numbers hard to achieve? Yeah, they're just not. I mean, this is just every other trade right, every other trade wrong. I'm saying you're just getting every other trade wrong. But when you get it right, just make 50% more than you lose. These are the numbers I'm going to use to do this, okay? Carlos, it all varies with your batting average. My Sharpe ratio could be 7 if I want it to be, but I maybe lose money at that. It's another topic, but let me finish this because we're right at 6 o'clock here. So if these are the numbers you're going with, and my point is that these numbers are Mickey Mouse numbers. I'm not trying to, shove something up your butt that's just pie in the sky numbers that only an expert trader can achieve. This is just Mickey Mouse stuff. 50% batting average, that means that your winning trades that month would be 15,000, your losing trades would be 10,000, you make $5,000 gross. And then let's say your fees are out the door. $35 a trip commissions, and that's assuming you're maybe 2 trades in, 2 trades out. That's huge, right? $500 for fees and lunch and software and a trading room, and I have expenses in here just up the wazoo that you'll never have. So you only make $800 that month. Okay, not too good. You do the exact same trading, you make it 300, you're making 3,300. Well, that starts to supplement an income. $400, maybe that's a living for some people. Probably is something a lot to be happy with, especially if you're quasi-retired or trying to add to your income. $500 risk. Again, you really are closer to 10 grand because I'm have expenses in here of $4,500. So the expenses I put in here are ridiculously high, just so nobody could say, well, you didn't account for blah, blah, blah. This accounts for everything. So you get the point. It's just getting confidence and then increasing the numbers. I see so many people, and let me tell you this quick story where I got onto this a while ago. I guess I don't know. This didn't, for some reason, I got this right away a long time ago, but I used to do mentorships. I don't know if some of you know that as well. I actually privately mentored 99 people. I know it's 99 because there's one short of 100. I never did the 100th. And by private, it was 3 to 4 people at a time. And I haven't done that. The last one I did was probably 10 years ago. It's been a while back. But I had this guy that emailed me before the mentorship, and he said, Paul, I can't wait to get together with you. And he said, here's my trading stats. I'm breaking even every week, and I don't know what to do. And he summarizes by saying that his batting average was 58%, and his Sharpe ratio was 1.85. Now, guys, you all may not know this, but 1.8 Sharpe and 58% batting average, is that okay? 1.8 Sharpe, 58% batting average. It's killing it. It's killing it, Jerry. You're killing it. It's just phenomenal. But then he says to me, I'm not making money. Well, okay. I didn't have time to look at his sheet. I just figured, okay, he doesn't know how to do Sharpe average, blah, blah, blah. He just doesn't know what he's doing with the math. Well, I get together with him. You know what it turned out to be? It turned out to be that he was risking $50 a trade, and he was looking at his profits after commissions and fees. So he was saying he needed to be not gross profitable, but net profitable before he moved up his money. And I'm like, do you know how silly this is? And this is a sharp guy. This is a very, very smart guy. He was, for crying out loud, he was an engineer. He was a rocket scientist. I don't know what he was. He was a very smart guy. He was smarter than I was. And he couldn't get it through his head that at a low level of risk that your fees will bring you down to zero. And I'm like, holy cow. And I went through like this kind of process with him, just saying, look, if you just change $50 to $500, do you know how much money you'd be making? And he's like, oh my God. It just didn't strike me. And I'm like, how many people think this way? Anyways. True. How you doing, Pradeep? I know you. You've been around a long time. And it's true. Confidence comes from mistakes made and correcting by writing them in your own handwriting. That's an excellent comment. Well, Reg, that's what I said. Well, number one, Reg, I'm assuming maybe you leg in on 2 and leg out in 2, so maybe from 4 commissions and 7. I'm just saying it's off the chart expensive. I'm just putting numbers in there where nobody could say I'm trying to lowball the numbers. I'm just saying I put fees in there. Look at all the other fees. $500. Who pays this for anything? I'm just saying I put expenses in here up the wazoo so nobody could look back at me and say, well, Paul, you're just making this look easy. No, I'm just saying put all these, buy lunch for yourself every day and put in your expenses. I don't care. It's just the money is there. Where are we? So here's the final lesson, the summary, and then I will hang around here a few minutes if you want to ask, but I want to officially end it in 1 minute, and then I'll hang around and answer questions if you want about me or about DTS or any other questions you want to talk about, but I want to end it for everyone else. They can go. Lesson, the final lesson, the summary. Paper trade. Risk a micro amount. Get confidence. Build confidence, I should have put. Increase the risk amounts, right? When you can prove you're making money. Again, just simply, if you're risking $5, move up when you make $25 a week. Gross, not net, right? 5 hours a week. Move up to the next level. Move up to the next level. Have a system where you move down if you blow it, okay? And keep moving up until you hit your risk amount where 1 hour a day makes your living. End of story. End of story. All right? Step 1 of this whole process, which I didn't include today, is, see you guys, is learn how to trade charts, to understand charts. And, that's obviously what I'm here for. I don't sit here selling anything all night. I'm here and I have the best seminars out there that are very cheap because I want to help people get through this stuff. If you've taken classes from me before, there's just a nominal fee to retake them because I don't want you to pay twice. I do need to clarify this though because everybody's getting the wrong idea. I know there's some of you. I know some of you. There's a place that's notorious for charging $25,000 to $30,000 for education, and they teach you nothing. And there's some people that are emailing me, Paul, I spent all this money, can't I get in? I'm sorry, I'm not trying to save the world. I'm trying to teach people, but if you made a bad decision, I'm here to help the people that, I don't want somebody to pay twice if they took classes from me just because it's a different company. So if you took my classes, you get a huge break. If not, I set these prices very cheap. They're $12.50 a class, $3,000 for all three. It's everything you ever need to know. It's a summary of everything that I have put together and synthesized over the years. I think they're phenomenal classes. You'll never get them better, and they're very cheap. And I am going to raise the price of them sometime in the spring, not for a little while, so you don't have to worry. But if you're interested, you see me about it. If you're available during the day, the trading room just rocks. We have fun in the trading room. It's basically, for the most part, you're free to go sometime after 11 or 12 o'clock. Enjoy the rest of your day. And of course, I put out a letter too for those of you interested. So that's what I like to do. If you're a poor chart reader, Stephen, I don't want to sound like any salesperson, but take my class. I mean, take my class. That's what you have to do. If I could send you a pill in the email, I would send it to you, but you just got to take it. That's all. And by the way, if you think I'm selling you something, read my website. Seriously. Go to my homepage. I'm kind of funny. Everybody tells me I'm an idiot. But I'm having fun, guys. I'm having fun. I'm really trying to help some people who are trying to learn this. Thank you, Herman. Go to the website and scroll down to warning. And you tell me if I'm trying to sell you something, all right? Seriously, who asked me this? This is Stephen? Do me a favor. Read my website down to the bottom under warning and email me. You tell me what you think. This is doable, but I'm not blowing smoke on anybody. I mean, you need to take a little time and commit. You got to go through at least 2 series of classes, maybe 3 before it really sinks in. Either get in the room or stay in contact with me with the email. I've committed to people to take the classes. I'm going to be committed to help you. I'm available by email. And somebody needed help. I jumped in the chat room with them the other day. They had some trades they're having trouble with. I jumped in the chat room and said, hey, I did that with one of you in here right now. I jumped in the chat room and said, hey, let's get in the chat room, talk about this. You're not doing this right. So I'm committed to help the people that take the classes with me. Email me your trades, email me your trading plan. I get back to you. We work it out. I do everything I can to help you make this work because it is doable. Okay? Thank you, Jeff. Well, I've had a unique ability to come from kind of a different history, and I'm really. And I also told you all, by the way, as I told you all, I'm only going to be around 4 years. I'm planning on 4 years from last September. So again, unlike some other people who are going to sell you a lifetime memberships and walk away, there is no lifetime membership. If you want to, you can pay annually if you want. I'm telling you, it'll be around 4 years. I'll update that in 2 years if it's going to be longer than that, so you have that much time to learn from me if you want to learn. And that's it. And I'm just having fun. I mean, I really am. I'm actually concerned about too many people in the room and that kind of thing. Yeah, thanks, Trader. But I feel like if somebody listens to me and they like what I'm saying, they're going to come around. I don't have to shove something up their butt. They'll come around if they like what I'm saying. So. I like to mention, I've gotten yelled at. I got some nasty emails from people because I taught my first classes and they didn't know I was teaching them yet because I don't blast it out there all the time. So, well, in 4 years, I'm just going to come out of the public spotlight and just trade myself the first couple hours and take the rest of the day off. I mean, this is a lot of fun to me right now. We just kind of became empty nesters, so I kind of have this time right now, and I'm very motivated, and I'm just at this perfect time in my life where I'm really enjoying doing this a lot. Stephen, if you go to my website there, you see where I typed it and click on seminars. You see the website link up there, right? And then on the left is very organized. Click on services. I'm sorry, Stephen. Click on services. But they're $12.50 a class, or all 3 for $3,000. Okay. And again, I know somebody that took one of my classes, bastardized it, and is selling it for $5,000. They're 3 one-day classes. They're 3 Saturdays in a row. You get unlimited retakes. You get access to me. I want to help you learn. Okay? So go check it out. Read what I had to say. There's no hurry, no pressure. Nothing's ever going on sale. See you guys. Nothing's ever going on sale because I don't want pressure. I don't want somebody to feel they got screwed, which has been a problem at other companies. Everybody, as the prices are always coming down, and you always got to, prices are never going to come down. As a matter of fact, they are going to go up a little bit in the future, but you have plenty of time for this, so don't worry. But there's never pressure. You're never getting an email from me. There's a big sale coming up. It's just, they are what they are. When you're ready, you take them. So I have this thing that if you don't want a seminar, you wouldn't take it for free if I gave it to you, right? And when you realize you need the seminar, you'll pay anything for it. Because I was that guy one day. I was that guy that would have paid anything that day for the seminar, right? Don't get, that's a little personal there, TY, but I think I get your drift, thanks. All right, so I'm done yakking here unless you guys have any questions about anything. Again, if you're available during the day, come join the room. I have not advertised for this room at all yet. I've not done anything other than the initial email to people I knew, word of mouth. I want to limit the room to 75 people. I'm going to do that by price increases, not by cutting it off at some point. And actually, considering I haven't advertised, I'm concerned it's going to grow too fast, if anything. So, but that's it. Any questions? Anything you want to talk about? Ask me about. I mean, trading, not trading, DTS, whatever it is. Feel free. Otherwise, I'll keep you all posted when the next one is, the next event is, and also probably everybody's gone that matters, but I invited everyone to this, and I also encourage you to sign up to be a member because I don't necessarily use the big list to invite everybody to everything, and a lot of educational stuff I just do to the members. So, sign up to be a member. You'll get that free little letter every weekend. It's no big deal. But also I do include some educational stuff to the members sometimes, and some members get invited to stuff that the whole group doesn't get invited to, meaning the whole email list. So if, I don't bombard you with emails, as you know. So, sign up if you want to be a member. There's no credit card. There's no expense. And it takes 6 seconds, as I say on the thing there. It's funny, Ben. It's funny you asked, Ren. It's funny you asked about Bitcoin. I mean, in what terms do you mean? In terms of just an economic thing or something to do with investing? Because I really don't know enough about Bitcoin. I don't really know much about it to talk about it. I want to actually, I said in the room the other day, I want to learn more about Bitcoin, just for my own personal information. In terms of, to me, is nothing to do with investing or trading, other than show me the chart. I'll take a look at it. TY, my favorite trade is not even a gap play, believe it or not. Everybody thinks I do gaps about a third of the time on average. If you go, what my favorite trade is, TY? Go to my website and go to free stuff and go to the trade of the week and look at the last trade of the week. Here. A lot of people probably even know I have this free stuff up there. It's CAG. That's my favorite trade. Do a little homework, come to the market prepared, just good old basic technical analysis, understand really cool aggressive entries. Yeah, I still do gaps. I mean, but you know what? I want to do the best of the best gaps. Yeah, that's the way I believe, is that if you have, I have 4 or 5 things I like to do, 3 or 4 I really like to routinely. And what my view is that if you only do one thing, you should be very focused. So you shouldn't be doing 10 things. But if you only do one thing and you don't have something good that morning, you may force, bad trades because this is all you have to look at. If I have a group of stocks here that are one strategy and I don't like them, I can come over here and look for the best strategy in this group. And if you do that on 3 or 4 different groups, which is what I do, you normally come up with 1 or 2 things you really, really like. So CAG was like my favorite. Now the last 2 trades before that were gap trades. If you look at the videos, you'll see the last couple were gaps. But the very last one, CAG, was just a good old basic major support, strong stock, major support daily, phenomenal entry. And actually, if you look where it went from the trade, it never stopped. The stock just kept going, but that was just kind of dumb luck. Thanks, Trader T. Appreciate the comments. So TY answered you. Bum, bum, bum. All right, guys. Last call, I guess. Again, anything else? I mean, I haven't had dinner yet. Don't worry about me. I'll be fine. I'll just sit here and talk all night. I'll be good. Market isn't, well, you always have to ask what time frame, Joe, but the market isn't. Joe, you obviously don't get my free letter on Sunday. You're obviously not a member, because if you were a member, you would know exactly where the market is, because I give that away free to people. But yes, we are in a strong stage 2 on the weekly charts, actually a power trend. The daily chart still is stage 2, yes. The big time frame has, for 10 years, that little sliding scale I have, the big time frame has been pinned to maximum bullish without ever moving once off that scale, ever. The intermediate time frame, naturally, it can change around. Daily charts pull back some, and we're going to see one right now probably. And intraday, of course, changes every day. But yes, we're in stage 2. There's no question about it. Thanks, Harvey. And I do trade futures. I like to do a futures trade or two every day. Be honest with you though, I don't actually share those with the room. I do sometimes when they're a very, like a bigger picture trade, like coming right off the 15-minute chart or something. But the way I do it, it's very, I can't call it properly. So I don't ever play that up, and I don't even really talk about it other than to say, here's an idea, here's an idea. I know what to do. I talk about the market all the time as a backdrop, and I talk about sometimes here's a great entry if you're playing the futures long. But I don't do much calling of futures, and if I do, I use the cues to call it because it's not a futures room, but that doesn't really matter. It's all the same thing. I mean, you should play the futures if you're trading the market, but what chart you use to guide you really doesn't matter. I like looking at the cues just because you can see the gaps better and that kind of stuff. So, okay. All right, guys. We'll call it a night here. We'll see you guys in the morning. Again, sign up for a trial if you want to be in the room. Maybe we'll see you guys in the future, and I'll let you know when the next event is, probably in a couple of weeks. I hope you enjoyed this one. We'll see you guys later. Take care. Have a great evening.